Good morning, everyone. In this session, we are going to discuss about key real estate private equity accounting ratios and metrics. This would be the third part of the real estate private equity accounting. So let's discuss that. But I would request you, if you haven't watched my first and second episode, please go ahead and check that. We have covered lots of things about private equity and key terms. So let's go ahead with the discussion. See, in a private equity, real estate private equity business, you may see the first ratio, which would be like IRR. Every investor, every fund manager, and even if you want to, let's say, as a fund manager, if you want to share this report with anyone, so basically calculate the private real estate private equity product returns in IRR. And this IRR, which is something really important, I would say, but let's understand it. What is IRR in real estate private equity? So what it means, the annualized rate of return earned over the life of the investment, factoring in time and cash flows. If I talk about formula, IRR, which is the discount rate that makes the net present value NPV equal to 0. So what it means, for example, let's say you invest 1 crore and receive 2 crores over 5 years. So your IRR would be 14.87% per annum. All right. So this is how IRR we calculate and even report it to the investors as well. We prepare separate report in real estate private equity, which talks about internal rate of return on all real estate equity funds and products. Second, the key performance indicator or ratio, which is equity multiple. So what it means, total return on your equity investment ignoring time value. This is exactly because in IRR the time value will be adjusted, but in equity multiple it's just a simple multiplication. If I talk about formula, total distributions divide with total equity which is invested. Equity, it means it's a capital. Example, invested 1 crore, returned 2 crores. So if I put 2 crores divide with 1 crore, 2.0x return, which is paid or received to the investors. So this is how you can calculate. Again, this equity multiple is also quite important one, even in terms of, let's say, if you're looking for an interview with GS, Goldman Sachs, in all cases you may expect questions around performance indicator. Third one is preferred return. Again, we also call it as a hurdle rate as well. What it means, minimum returns LP, which is limited partners, receive before profits are split with the GP. GP means general partners or fund managers who take care of real estate investments on behalf of limited partners. So, typical rate which you would say like 8% annually. If I talk about, let's say, example, let's say capital invested 10 crore and preferred return which is 8%. So 0. 8 crore, you can just means calculate it 10 crore into 8% divide 100. If you just do this, you will have 0.8 crore, which is yearly value uh, for per annum as a preferred return, which is 80 lakhs somewhere. The profit above 0.8 crore are split uh, you know per split profit between general partners and limited partners, and that basically receive as a carried interest as well. Then another main important, I would say, indicator, which is cash and cash return. What it means, it measures actually cash return received annually versus amount invested. So if I talk about formula, cash on cash return, annual cash flow divide with equity again invested. See, in this case, we are talking about annual cash flow, not inception to date. So, example, let's say annual rental income, which is 10 lakhs, and equity invested, which is 1 crore. So 10 lakh divided with 1 crore, return should be somewhere around, or cash on cash return should be around 10%. So in short, cash on cash, it means how much amount investors has received from the fund. So that amount can compare with total amount which is invested. Simple. The fifth one, which is loan to value ratio, again in a real estate private equity, most of the funds check the LTV. And what it means, LTV is shows the level of debt financing used to acquire the property. So, for example, let's say if I talk about formula, loan amount divided with property value. So, how we can compute it? Let's say loan which is 3 crore and property value which is 5 crore. So, just divide 3 crore divide 5 crore. So, it means loan to equity for that property which is 60%. And I believe up to 90% LTV, which is possible in real estate private equity, because that depends on the property to property location, and there would be lots of other factors as well. But LTV, which is again one of the parameters which the real estate private equity fund managers or fund accountants also they check, verify, and action accordingly. And the last one, which is capitalization. There are other ratios as well, but in this particular module I have covered just top 6. So remaining one I'll take care of in next episode. If I talk about capitalization rate, so what it means, guys, capitalization rate of return based on the property's income. So we'll call it as a capitalization rate. Formula: cap rate is equal to net operating income, right, divide with property value. See how we compute net operating income, I have discussed that in my second episode. I'll provide link you in description, you can go and check it. So if I talk about example, so net operating income, let's say 20 lakhs from the property, and property value which is 5 crores. So just compare 25 lakhs divide with 5 crores would be somewhere around 5%. That would be the cap rate. All right. So you see all the ratios which are quite the important, guys. So you should practice out, you should note it down, and go through it again before an interview. If you have any real estate private equity interview, you can reach out to the GMT Academy experts. Of course, will be there to help you. All right. Apart from that, so see, we have launched fund administration course along with investment banking, the modules. It's a combined course. Nobody has launched it, but we have did this. We have done this. So if you're really interested, please go and check the link in description and connect with GMT Academy experts. And you can also avail 20% off on the course as well. Yeah. So thank you very much for watching this. We'll see you next episode. Thank you. And if you have any queries as such, please contact to this number 7387609230. Thank you very much, guys.